All right, folks. Welcome to this week's Forex commentary, and yeah, it's been an interesting weekend. I had the episode on the mentorship dropped about the economic calendar and you know um, news drivers. So if you haven't seen that installment, I encourage you to go and see it because I think it's very interesting. It's a very interesting subject, and I think it touched a lot of things and connected a lot of the lessons we had prior, like market profiles, like the draw on liquidity, and levels too, because we talked about key levels on the 4 hour time frame, how the change in staking delivery helped to validate last week's bias, which I think I'll try and cover again here. So last week we talked about DXY, especially we delve into the daily time frame because the daily chart last week had the bulk of the details, right? And that's what I was able to use to frame the buyers to be bearish. But apparently last week was incredibly manipulative because we had like the whole of last week bullish on the XY up until Friday, which just all of this one happened on Friday. Literally from this high to the previous weekly low happened on Friday, which is very interesting. But going forward, it's useful that we had last week close like this because now we can more confidently say that we're likely to see DXY go lower and not just trade lower. In fact, we're likely to see DXY likely trade into sell side liquidity here. But of course, we know that even if we're bearish and stuff, we need to look at some near-term objectives like sell side here. Okay, that's 9666. Let me draw this one here. We have sell side here. That's 96663. So this would be the first objective, of course, and we can even put into consideration this objective, and this one basically would be useful for like day trading objective, okay? Because if you're day trading and the market trades into this previous weekly low into this level here, you might want to put this one into consideration, especially if it happened away from your regular time window. And even if it happens in the New York session, of course, it allows the opportunity for the next day to return back into the range, maybe in Asia, and of course you can find something else, maybe in London session or stuff like that. Now, the more we progress in the mentorship, I think it's a lot more easier for me to communicate my thoughts because I know the information is out there already, and anybody listening to me would have gone through the mentorship, of course, and it's a little more easier for me to express myself, knowing that okay, the audience that are listening to me have an idea of what I'm talking about because I've literally thought it, and it's the information is out there. Okay, so we're still bearish on DXY, even from last week's close. We closed bearish last week after trading above, the previous, weekly high, which is a very strong, indication that we could see the DXY continue to go lower this week. So, yeah, on the daily time frame, okay, the daily chart. Don't worry, I don't have too many levels here. This was level we talked about last week. You said DXY was below this daily inversion fair value gap, and we have a swing high here and a daily time frame change in staking delivery. I mean, this was the price action we're using to discuss you know last week's bias. We had the bearish close, and that was all. And even today, I'm not waiting for market open for some reasons. I think most of the time whenever I have this commentary on Monday, sometimes it takes a while to you know you know touch the videos and downsize it and stuff. So my morning on Mondays usually is messed up, and I just have a feeling that we might have a very bearish week. Okay, this one I think will be very very bearish. Okay, and I want to conserve a lot of my strength so that I can be active, at my trading hours, right? Yeah, I know I do not trade on Mondays, right? Especially in the London session, because I do not know how the weekly range is going to unfold, okay? But usually, if I have an idea of how the market opened on Sunday, then I can, perceive what, London session is going to be like, especially around the new week or the new day opening gaps. Okay. And I don't know how dollar index is going to have open tonight. I don't know if we're going to open with a gap higher or we're going to open with a gap lower. I don't know. But um, I'm very soon DXY and levels I want to see DXY sell from this new week would be, you can see this sorry, this level here, this old daily fair value gap. Okay, I know we've played around this gap, but this is also a level we could see DXY trading to return here and continue to sell off. Really. Ideally, this week is supposed to be a straightforward week. Ideally, because we've had last week, run through the manipulation, and if it's not straightforward, then probably we are seeing something, even crazier than last week. Maybe we're seeing the candles just expand because this is an extremely large range. And mind you, we've traded below previous weekly low. Okay, so because we've traded below previous weekly low, of course, there's always the expectation that we could see the markets returning to the range. And the worst we could see is that Monday consolidates. Okay, and if Monday consolidates, it leaves the possibility of a gap. Okay, we could see a gap form on the daily time frame, and if that gap forms, then we are likely to see Tuesday trade into the gap and stuff like that. So someone asked me a question on Twitter. The person was asking me, is there a way we can always determine when the high or the low of the week forms? No, really, because it's very, very subject to price action. Now, with the way last week closed, and we have a bearish week, and we've seen markets run liquidity here, and we are really below key levels and stuff. Now, mind you, all of these consecutive upclose candles, we have a breaker. Now, someone could call this a breaker, but usually breakers always within swing point gets swing point is what we want to make reference to as a breaker, because this is the 1 day time frame. Okay, if this was a premium version trading view, and this was like 3 day time frame and stuff like that, all of these candles, like 1 2 would be one singular candlestick. Okay, and it would be wrong to call this a breaker because we don't have any swing point here. Okay, so we still have this level here, this low here, this high, and this lower low. So this level here overlapping with this daily inversion fair value gap is where I'm making reference as our key level, right? So we are currently still below key level, but because we trade into previous weekly low, we could see the markets return a little bit inside the range or consolidate or so. Or we could see the markets just going to run aggressively. It's very, very possible. I mean, look here, we saw the markets run above this high here, and the market's just coming to run aggressively. It's possible. Every single thing is possible in the markets, and that's why you need like a trading system. You need to know what you're looking for so that you don't just fall for anything. I think there's this quote in this movie that if you don't stand for something, you'll fall for anything. I think that's what the market understands. Okay, so you just have to have a rule-based system that puts you in a trade or takes you out of participating in just about any setup you see, right? Now, if we go to the economic calendar, you notice that we have this week is kind of like busy. Medium impact drivers, Tuesday 1:30 p.m. and the London close, and we don't have anything for dollar based on Wednesday, but we have something on Thursday. That's 1:30 and 3, and we have something on Friday. So it's like it's gonna be a busy week, and we also have for Monday, but the London close is medium impact driver, right? So although there's bank holiday for pound, so it's still it means, it doesn't mean, I don't know. I really don't know. Like I say, I mostly do not favor trading Mondays, especially the London session, and owing to the fact that we have events slated for the rest of the week. I think it's going to be interesting to see how the rest of the week pans out. Okay, and now the whole idea of the news driver. Okay, because you see the news driver, it doesn't really, you don't really need to get excited, because it's possible the market runs all of this objective maybe by Tuesday and utilizes the rest of the drivers to return back into the range. Okay, so don't get excited. Okay, the reason why you have knowledge is not for you to get excited, because if you get excited, then you're going to apply it wrongly. Okay, now mind you, the 4 hour time frame change in state in delivery, because while we are looking at this as a daily time frame candle, okay, we want to trade the weekly buys, we want to trade the weekly draw on liquidity, and that's what we are looking at. We're eyeballing here. Okay, even though we know that eventually all of this move is likely to take the markets into this low sell side here, external range. Okay, and so since we already have an objective and we want to trade the weekly range expansion, the weekly candle is going to constitute of daily candlesticks and 4 hour time frame candlesticks. So all of this, that's market structure. When I mention candlesticks, I'm talking about market structure. Market structure is still going to define when all of this move is going to unfold, except probably markets are trading outside regular trading hours, right? So everything still remains. Okay, don't allow new information to excite you. All right, so the 4 hour time frame, just in case there's something that we want to be looking at. There is this, we have this huge imbalance here, and I think the markets could potentially return back into this inefficiency. Now the downside is I don't know how much of the inefficiency the markets are going to rebalance. I don't know if the markets have interest here at this low here. I don't know if the markets have interest just around this level here. This level here, we have a balanced price range, and I don't know if the markets have interest here. So it's kind of like a lot of things I need to put into consideration first, because I need to understand how does Monday trade, especially the London session. Okay, if the London session isn't validating the weekly buys, because the weekly buys is very, very important. Yeah, we're bearish. Okay, so if the London session isn't validating weekly buys and we're possibly returning back into range, so it means there's some premium array the markets are interested in, right? And now mind you, I talked about the possibility that market creates a daily fair value gap. Okay, and once that's created, the daily gap becomes the key level for Tuesday trading, and then we can now begin to look at the economic calendar to define which session, which is the New York session on Tuesday. Okay, which what we're thinking of as the high probability trading session. Okay, now I don't know what market structure is like. I don't know how market structure will unfold this week. And that's what nobody knows. Okay, if I knew how market structure would unfold, I mean, I should be as rich as Elon, because I'm gonna be risking all of my account, 100% of my capital to trade. But I do not know. Okay, but definitely this week I have a very strong feeling that if we're really focused and disciplined, we're gonna make a lot of money this week. Okay, and you know maybe markets trade into, say, this key level, for example, this old gap here overlapping some low. I don't know, but the markets could just utilize an entry drill. Markets could trade however they want to trade, and that's why I literally always teach from the perspective of probability. Okay, so that instead of you thinking, okay, I'm very sure the markets are going to do entry drill, or I'm very sure the markets are going to come up here, which doesn't make sense to me, before I take shots. It doesn't make sense. Instead, I'm teaching you the change in the state in delivery. Why? Because when you have a bias and there's a change in the state in delivery on the 4 hour time frame, that validates your weekly bias. Okay, so it means the markets have priced in the high or the low of the week and are willing to run into the draw on liquidity. That's what the 4 hour time frame change states in delivery means for your weekly bias. Okay, I'm not talking about daily bias here. All right, so we're just gonna watch. We're just gonna see. I'm just putting this one here because I've got to put something here. Okay, because there's lots of imbalance and stuff like that, and this seemed like This seems pretty cool. I don't have any affiliation with this level. I just looked at it and it seemed very, very cool, and that's why I have it here. Okay, I don't have any expectation for how markets will trade. I just know that the market is bearish and the draw on the crew is sell side. Okay, so how the markets will trade, I'll leave it up to the market to decide. And when you're done, when I see a follow time from change stay in delivery, okay, I engage key time of day after training 2 sessions and stuff like that. And all of those things, I just need to see. But DXY, we're expecting bearish. I think it's pretty straightforward this week. Anybody who looks at the chart this week would expect bearish, owing to the fact that we're even bearish last week. Okay, and now, we saw, a lot of sponsorship in the direction of that weekly buy. So it's pretty straightforward. So Euro USD likewise, last week we're bullish. We had a very strong bullish close last week, and the market consolidated for the bulk of last week and trading to previous weekly low, which I wasn't expecting because we had a very strong bullish candle closure. Assuming this candle was bearish, then we'll be talking about the fact that market has traded into a premium, okay, and the markets want to return into the previous weekly low only. Okay, we will stop at the previous weekly low because since we're bullish, talking about the closure of these candlesticks, we're looking at these candlesticks here, this candlestick here, this candlestick here, respecting this premium area, this fair value gap, and this auto block here. So we were bullish based off of price action. Okay, and this week we saw the market last week close bullish, which, like in dollar index, makes a whole lot of sense because we want to see Euro USD go to the upside. So daily time frame, really, we have we have this level here, this old daily inversion fair value gap, and the market could open, make a retest of this level, because this would be the first key level I will put into consideration. First key level would be this inversion fair value gap. Okay, and say Monday consolidates, then market creates a daily fair value gap, and we can expect Tuesday to trade into that daily fair value gap, affect a follow time frame change state in delivery, and then we can see more upside on Euro USD. So it's kind of like very straightforward, very straightforward, very straightforward. So we just need to keep our balls, except if the markets open, just attacked buy side, just because when it's very obvious, okay, like this, I think it's very obvious. It's either they're expanding quickly or they play some tricks. But I think at best, if you discipline and you stick to the rules, even if they play any tricks and you follow the economic calendar and stuff, I think everyone will be really fine, because now we know the draw on the liquidity. For certain, we are looking at markets trade above this high here, low resistance liquidity round, which we've talked about on the YouTube channel. Some old video I talked about liquidity run and stuff. Okay, so worst case scenario, if the market decides to consolidate, probably they want to return back to this auto block, but I do not think they will return back to this last down close candle. I do not think so. I think at best, if the market creates a fair value gap, I think that's what markets will utilize, but I don't think they're going to come down here. But if in fact they will come down here, then all the best. I'm still gonna buy. Okay, all right. So yeah, so that's all for this week's market review. If you come to the end, kindly like, subscribe, and do all those beautiful stuff, and share with the rest of the community. Okay, until the next video, hopefully we talk. The next conversation will be a new mentorship video, hopefully. But until the next one, be safe.